I think Bitcoin went down about 75%. The only negative to Bitcoin right now, and there are some positives, I want to be clear on that. In fact, the chart itself is bullish, right? It is neutral to bullish on the chart. But the negative is the Nasdaq's hitting all-time highs, the S&P's hitting all-time highs. Bitcoin right now is not. So it is lagging the risk-on factors here. The bear case would be any sort of break of this low channel line right down here, which is around 56,000. That would be a failure of the bullish pattern, and you'd probably get a move down to 50K on that. Now, if you can break to the upside of the channel, which is around 69, then all of a sudden it's game on, full out bullish, and you'll stop maybe at 74, the all-time high. But I even think it blows right through that and continues up much, much higher.
There has been a close correlation between Bitcoin and flagship indices such as the S&P 500 or the tech-heavy Nasdaq 100. Gareth Soloway, Chief Market Strategist of VerifiedInvesting.com, analyzes the latest trends in Bitcoin's chart and identifies critical levels to watch. Bitcoin prices have been trending lower in the past couple of weeks and generally remain within a bearish formation. Although momentum appears to be picking up, bulls are not out of the woods just yet. Bitcoin, the leading cryptocurrency, has experienced its best trading day in 2 months, surging by 3.45% to reach $67,857 on May 16, 2024. This spike comes as market analysts and investors anticipate a summer of easing, a period expected to see more favorable economic conditions and potentially lower interest rates. Now, as Bitcoin consolidates without collapsing, Soloway's stance shifts from neutral to bullish. However, he cautions that breaking the lower trend line would invalidate this bullish outlook, with potential declines to $50,000. According to Soloway, about 75% of such patterns typically break to the upside. In a post on X, one of them, Mikey Bull Crypto, said Bitcoin has formed a cup-and-handle reversal pattern, suggesting an imminent surge towards new all-time highs. This formation is a glimmer of hope for optimistic traders, especially now that prices have been moving lower and sideways, erasing gains posted in March. Soloway identifies the critical levels. A break below $56,000 would signal a failure of the bullish pattern, potentially dropping Bitcoin to $50,000. Conversely, a breakout above $69,000 would be highly bullish, likely pushing Bitcoin past $74,000 and even higher. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
The only negative to Bitcoin right now, and there are some positives, I want to be clear on that. In fact, the chart itself is bullish, right? It is neutral to bullish on the chart. But the negative is the Nasdaq's hitting all-time highs, the S&P's hitting all-time highs. Bitcoin right now is not. So it is lagging the risk-on factors here. Now, the bigger question would be is if the Nasdaq drops 10%, does maybe Bitcoin not drop 10%, in which case that would be a positive for Bitcoin. But right now, it's lagging. On a positive side, there's a channel here on the chart, and this is known as a bullish channel. It's a big move up with a lot of digestion. That's what creates the channel. You can see the lows align and the highs align. And so basically what you're looking for is a breakout above 69,000. If we can get that, then Bitcoin probably rips right to 74 and honestly probably even higher. But in general, if you looked at 100 of these patterns or 1,000 of these patterns, these sideways channels after big runs, I would say about 75% of them break to the upside. Correct. So what you do is you look for the bigger move. So what was the bigger move? We went from about 38,000 at the low here after the spot ETF, the fall, and we went all the way to 74. So the bigger move, the kind of like the dynamic or the major move was to the upside. And then you're getting a lot of sideways, essentially digestion. Think about this as a marathon. So a runner started down here and ran the marathon. You can't say, hey, go run another marathon the second they finish. What do? They pause, they sit down, they refuel, they eat, which is the consolidation pattern formation. And then they can make their next run to the upside and go on their merry way. So I think that's really important. This is what we call a classic bullish consolidation channel pattern. Yeah, so basically what you're looking for, so you're neutral to bullish right now because you're inside, which means you can still bounce around inside of here. You could go down a little, you could go up a little. The bear case would be any sort of break of this low channel line right down here, which is around 56,000. That would be a failure of the bullish pattern, and you'd probably get a move down to 50K on that. Now, if you can break to the upside of the channel, which is around 69, then all of a sudden it's game on, full out bullish, and you'll stop maybe at 74, the all-time high. But I even think it blows right through that and continues up much, much higher. We were at these highs, right? when we were up at 70. It's probably one of the last times we talked when we were up in near these all-time highs. You know, it was an extended move. We were into significant resistance on the chart. In fact, if you go back here to the previous all-time high, I remember one of the theses that I gave you was that the previous high here in 2021 was 65,000, and we made a $4,000 higher move to 69,000. And then if you add 4,000 to 69, you get basically 73 to 74. So after such a significant move on Bitcoin straight up to 74, it made sense to be bearish, neutral to bearish for a pullback. But now again, as we digest and we're not collapsing, it starts to make me a little bit more neutral to bullish. Now, again, just please understand, everyone, because this is key. If we do break this lower trend line here, then that kills the bullish side, and the bears essentially take over for a dip down to 50 at least.
The S&P 500 stock index hit a new all-time high Wednesday, as investors welcomed a key report that revealed inflation was softer than expected in April, boosting hopes for lower interest rates, which would be friendly for stocks. The tech-concentrated Nasdaq Composite also set a new all-time high, rising as much as 0.7% to break its record, which was also set in March. In his tweet, Soloway mentions that the S&P may be repeating the same pattern that Bitcoin made in 2021. Regarding the US dollar, Soloway notes it is still bearish. A trend line from the 2022 high connects through subsequent highs, showing resistance that turned into support after a breakout and retracement. The current trend of the dollar index shows a slight decline with a recent decrease of 0.08% today, bringing the index to 104.932. Over the last month, the index has decreased by 1.02%, although it shows an increase of 3.47% year-to-date and 2.44% over the past year. Let's redirect our attention to the video where Gareth Soloway compares various charts with Bitcoin's previous pattern. This recurring pattern helps Soloway remain cautious and avoid becoming overly bullish or bearish.
As you guys can see. So this is a couple key analysis points that I really reserve for kind of top investors, but I want to share them with you guys. So number one, we are making a new high on the S&P 500, but the things that have me concerned, number one, you have this trend line here. So we have a trend line that we are hitting on a short-term overbought scenario. But if we throw up our RSI on this, and this is the relative strength index here, what we can see is that you have a negative divergence. So again, if you look at this daily chart, here was a high and we're making a higher high. But on the RSI, you have a high and a lower high. If we flip over to the weekly chart, it's even more pronounced here. Take a look at this negative divergence. You have a high on the weekly, a higher high now, and you have a high and a lower high on the RSI. Relative strength to me is a guide of what big money is doing. It's telling me that even though the markets are going up, smart money is unloading into this, and it does make me nervous about the potential for a drop. The other thing to just keep in mind, a lot of investors will say, hey, you know, we're making new all-time highs, so let's rev the engines and we're going to go a lot higher. I just want to remind people that many charts perform this way. What I mean by that is you get the big bull run, you get a big correction, and then you make a new high, and then everyone assumes it's continuing to go higher, and there's a rug pull where it collapses. And just to remind people, look at this pattern formation. Imagine this is the chart here. We go up, we go down, we go up, we make a new high, and then we get a big drop. If we go to Bitcoin, let's go to the Bitcoin chart here. Let's see what we have on this chart. So if we go to the Bitcoin chart and go back to 2021, the exact pattern played out. Here it is. You had the big run, the corrective move. We made a higher high on Bitcoin, and then we collapsed down from 69,000 to 15,000. Then let's look at natural gas. It's another one that comes to mind, but there's so many of these chart formations. But look at the natural gas chart back in 2022. There's your run up. Big correction, a higher high. So everyone thought, oh boy, this is a breakout. The stops got triggered on bears, on the shorts. And then look at the collapse that we saw after that, natural gas coming down. So these are the types of patterns that I look at over and over again. And they essentially keep me honest with what to expect. So I don't get too bullish or too bearish. I kind of be conservative and start looking for these types of patterns to play out over and over again.
Keep the charts up, please. Let's talk about the dollar, DXY. And what are we looking at here?
No, so right now it's still bearish. You see this trend line here. If we go back to 2022, this high on the dollar connects through these highs. We hit it right here, pulled back, and then broke out, retraced, and this now becomes support. So it was resistance here, here, and all the way back. And what you're looking for is now for the US dollar to continue down until we get back to this trend line. So I would basically anticipate a move back down to 103 over the next week or two. And then once we get to 103, you start getting some serious support on the US dollar. So I still think, yeah, I still think we got downside to go here. And I can even extend these lines out a little bit more. And what we can see is eventually this upsloping line will meet this one, and this will be some epic support. But I still think the dollar has further downside to go over the next week or two.
Bitcoin jumped alongside stocks on Wednesday after the April Consumer Price Index showed inflation had eased from the previous month. Known for its extreme volatility, Bitcoin experienced a dramatic plunge of over 64% in 2022 before rallying 160% in 2023. This volatility presents a significant challenge for crypto traders. In contrast, the S&P 500 offers more stable performance, averaging annual returns of 9% to 10% and serving as a benchmark for the U.S. economy. Despite offering lower returns compared to Bitcoin, the S&P 500's consistency and reliability make it a preferred choice for risk-averse investors seeking predictable outcomes. How can investors balance their portfolios to optimize returns from both Bitcoin's high-risk, high-reward potential and the S&P 500's stability? Feel free to share your thoughts in the comments. If you found this content helpful, give it a thumbs up and remember to subscribe to stay updated. Thank you for being a part of this journey with us.